Hello, everyone. Welcome to the last weekly recap of the year for the Defiant. Oh my God, we're at the end of 2022, a crucible year. A lot happened, of course, this week, as happened every week. And joining us today is Alex Gilbert, star staff writer, the Defiant. Absolute machine this week, cranking out copy. And YYC Trader, news director, the Defiant. Myself, Eddie Robinson, contributing editor to the Defiant. We have a lot to get to. The holidays are around the corner, so let's hop to it. But before we do, I just want to give a shout out to our sponsor, Railgun. If you like our content, please like, subscribe, and share. And a big shout out to Railgun. We'll have more on them later in the stream, but we're happy to have them along for the ride. Well, what else are we going to start with? The FTX saga continues. It's amazing how fast this has shifted from an SBF apology tour to all of a sudden he's arrested, indicted, extradited, arraigned, and then bailed out on $250 million bond. Alex, you've been covering this story inside and out since it happened. Bailing SBF wasn't the only news that happened on this front. We also saw, not unsurprisingly, that his two close colleagues and top executives at FTX and Alameda Research, Gary Wang and Caroline Ellison, have pleaded guilty to federal charges of fraud and are cooperating with prosecutors to build a case against Sam Bankman-Fried. And then we also saw the rather amazing headline that FTX unearthed $1 billion in hundreds of company bank accounts through the US and additional accounts in Japan as well. And that was kind of the third major development this week in the FTX saga. Just absolutely incredible what's happening there. We also have Binance under a microscope. The Defiant is continuing to report on mounting concerns that Binance may be not as strong as purported. Everybody is so nervy right now because of what's happened with FTX. Binance is under a microscope. Alex, you've been doing a lot of video segments for the Defiant YouTube channel on the Binance situation. This week we saw $6 billion in user withdrawals. Audit firm Mazars suspended its service for Binance and other crypto exchanges. And this is coming at a time when pressure is mounting to show proof of reserves, which we don't even really know what those are or mean or whatnot. So that's something for 2023. That's going to be a huge story in 2023 is proof of reserves. And then another shaky outfit, Grayscale. So Grayscale, of course, produced and released the BTC Trust, which is a kind of quasi fund that's been trading and is a way for any investor, but it's really geared toward institutions because there's very high minimum investment. There's a lot of pressure on Grayscale right now. Alex, you've been covering that as well and wrote a story this week about Grayscale would consider a tender offer for GBTC. That's the BTC Trust if it cannot convert to an exchange-traded fund. You'll recall exchange-traded funds are very inexpensive vehicles that dominate the passive investing space, especially in the United States, but they're also quite prevalent in Europe. That's been kind of a holy grail for crypto for a long time, is to create exchange-traded funds and not super expensive trusts like GBTC. It's kind of a weird one because Grayscale is essentially saying, hey, if we don't become an ETF, we're in real trouble. A very odd kind of messaging there. Anyhow, let's plunge in. Let's do SBF. This has to be an opera at some point, right? The FTX opera. Is Alex? Maybe you can write that.
Sure, I'd be happy to. I mean, we might get that, right?
Yeah.
Michael Lewis, the famed chronicler of the 2008 financial crisis, was shadowing SBF for a couple of months before the blow up because he was to write
That's
a
right.
book about Bankman-Fried and FTX, and he must be, chomping at the bit, ready to start writing after
I
everything
would
that's
think
happened
so.
so far.
Yeah.
So we might get our opera, epic, whatever, soon enough. But yeah, so he was arrested last week, right? And then
Yeah.
the first news reports that came out said that he would be fighting extradition.
That's right.
He gave up that fight fairly quickly, and there was a lot of kind of like funny commentary on Twitter about he's like, I'm going to fight extradition, and then he gets to the Bahamas' notorious Fox Hill prison and decide, you know what, maybe I'd rather rot in a U.S. prison. But
his lawyers did. I think he got some good lawyering. I mean, I'm sure he's paying top dollar, but that's not a bad deal he swung, huh?
Right. So no, he actually decided to drop the fight against extradition because he understood that, and his lawyers had hashed out this agreement with prosecutors at the U.S. Attorney's Office in the Southern District of New York, that he would essentially be let out on bail, which is what happened, and the requirements were quite strict though, right? So he had to put up a $250 million bond, which is crazy. It's my understanding that they're.
Yeah, just explain that a little bit, because I think a lot of people automatically assume that he had to put $250 million like on the barrelhead. That is not the case, right?
No. So it's essentially his parents are on the hook for $250 million should he violate any of the terms of the bond or fail to show up in court. But all they actually had to put up front was they had to kind of put their house up, basically, right? I mean, they still have it. He's going to be living there with them, but that's like
that's the thing. That's the thing that you got to tip your hat to his lawyers, because to not only get him sprung on bail, but to do so where he's under house arrest in California, with his parents for the duration of the trial, that's not a bad deal while he faces.
Did he spend any time in the U.S. jail?
Well, he would be
like
detained. Yeah. But I believe he's in California now at his parents' house, licking his wounds and girding up for this legal fight.
Well, something that's interesting that I had seen, and maybe you can speak a little bit more to this because I think you know more about how this stuff works than I do, but John Carreyrou, the former Wall Street Journal reporter who broke the Theranos story, took to Twitter to note how different his treatment has been from Elizabeth Holmes. Like, even today, Elizabeth Holmes, a convicted felon, SBF is still only an alleged fraudster.
Correct.
Even today, she has more freedom to move around than he does. He was, he made his appearance in court, cuffed at the hands, cuffed at the ankles. And he, within a month of the collapse, had been arrested and charged, whereas it took years to do the same in her case, which is, granted, their cases are wildly different, but he raised the fact that the difference in treatment was interesting. But now his case might be more akin to Bernie Madoff's.
I mean, every case is different, but I think clearly here you have what prosecutors like to call an orgy of evidence. So you've not only got two close partners who've already turned state's evidence and are willing to testify to that effect, which is powerful, but it looks like they never bothered to hide anything. So as soon as John Ray and his team got in there, and the forensic accountants started getting in there, and all of this became privy to prosecutors and their investigators, they were able to move really quickly. And I think on the bail question, it's reasonable to assume that the guy's a serious flight risk because he's domiciled in the Bahamas. He was domiciled in Hong Kong for a long time before that. So that clearly is why there's a $250 million bond on this. But in terms of differences in treatment, yeah, it's a Southern District in Manhattan versus the Northern District in California. Those offices have the discretion to manage themselves in their own way. The U.S. attorneys are different. So yeah, I mean, Southern District it's pretty rough and tumble, man. That's like where they prosecute organized crime.
Yeah. Well, yeah, and to your point, right? So the other big story this week on the FTX front was that Gary Wang, his FTX co-founder, and Carolyn Ellison, his on and off girlfriend, but also the former CEO of Alameda Research, the trading firm that he had founded, they both were charged. They've pleaded guilty. And the news that all this had happened actually came right when Bankman-Fried boarded the flight to New York from the Bahamas. So to my knowledge, we don't know exactly what the Southern District of New York, the U.S. Attorney's Office there, had charged Wang and Ellison with. The statement that the U.S. Attorney Damian Williams had put out Wednesday night, I think, didn't mention what the charges were, simply that they had pleaded guilty and were now cooperating. But they were also sued and pleaded guilty to the suits from the CFTC and the SEC, and those were detailed.
Right.
Those told us a lot about what they had done at those companies. The highlights: Gary Wang. There had been I guess news reports and rumors about this, but Gary Wang admitted to having created a back door within FTX that allowed for the transfer of customer money to Alameda. Then Carolyn Ellison, in turn, used that customer money to make trades that went bad. They lost the money. We've reported earlier that the new CEO, John Ray, said that he thinks the amount of money lost was somewhere around $7 billion. And I mean, it's got to terrify Sam Bankman-Fried, right? Because like everything that people, like the fraud that everybody thought had been going on, two of his closest confidants have admitted, yeah, that's what we were doing.
Yeah, I think that's a really good point, Alex, is that the legal jeopardy that Bankman-Fried faces right now is so considerable that he may not even be able to cut a deal with prosecutors. I mean, often in these cases, you can win some leniency from prosecutors in terms of what the sentencing will be if you agree to plead guilty. And then the prosecutors will ask the judge to say, please sentence at the minimum end of sentencing guidelines. But in this case, I don't think prosecutors, they may not have to give anything. They may just say to Bankman-Fried, look, if you want to plead guilty, fine, but we don't have to cut a deal. I mean, we got you dead to rights, and
Right.
That's what's going to be interesting, is that if Bankman-Fried decides to go to trial, as Elizabeth Holmes did in the Theranos case, it may be that he might as well, because there's always a chance you could get acquitted. I mean, it may be slim if there's a lot of evidence against you, but if prosecutors aren't willing to cut you a deal, then why not go to the jury? Again, this is all just supposition on our part, but as you've reported, Alex, it's just striking how fast this case has moved. I mean, most of the time, securities fraud cases take a long time, years even. And this one is just like that, just happening so quickly.
Something interesting that I read, the Wall Street Journal had reported, they had an interview with, I forget now which person this was, somebody at the Justice Department who attributed the speed with which they had brought these charges to the fact that last year, crypto enforcement divisions had received a huge influx of funding. There weren't any hard numbers attached to that.
Very interesting.
But they were like, yeah, we couldn't have done it if we didn't get all that money last year, and really beefed up the staff working on this.
let's use that point to kind of segue into Binance and into the broader picture of what's happening with enforcement and the crypto crackdown, because that's going to be a massive story next year. What we've seen now is only a taste of what's to come. And our colleague Sam Haig reported a really nice piece in today's Defiant about Gary Gensler, an interview that he granted to Bloomberg News. And in that, he sent a very strong signal that, the crackdown is only beginning. And this is a multiple front dragnet that's taking place. You've got the Department of Treasury. We already saw what happened with the Tornado Cash case, which I would argue is actually the most sensational case of 2022 in that it's so crypto specific, whereas the Bankman-Fried FTX case actually looks a lot less like a traditional securities fraud case.
Yeah.
Gensler is clearly telegraphing that we're staffed up, as you just pointed out, Alex. We've got the budgets to do this. And you've got this competition between different agencies that are all trying to put scalps on the wall. That's how these guys operate. I mean, their CFTC lawyers are competing with SEC lawyers, are competing with justice lawyers, are competing with Treasury lawyers, OFAC lawyers, the Office of Foreign Assets Control lawyers. They're all competing because these are career-making cases. So you got to remember, like, all these prosecutors, investigators, they're human beings. They have ambitions just like everybody else. And so when Gensler, I don't think Gensler is just blowing smoke here. I mean, I think he's actually like telegraphing something that's going to be very real. So when you say that these staffing is up, resources are up, whatever you guys need, put some scalps on the wall. Yeah, I believe that.
Yeah.
Tell us about Binance. Tell us about the Binance situation and how that might be the next chapter here.
Sure. I mean, one of the interesting things that you saw when FTX blew up was just this commentary from crypto folks online about how, well, wouldn't it have been nice if the regulators weren't asleep at the wheel and if the media wasn't asleep at the wheel, right? Like, how could it be that this massive fraud had been perpetrated right under everybody's noses? Our media watchdogs, our regulatory watchdogs, this is what they're here for, to catch this kind of stuff. Why didn't they? Right. Now, to be fair, the media kind of sort of did, right? I mean, this all started with a CoinDesk news report.
CoinDesk broke it open. So, you're absolutely right.
Right.
Yeah.
Whatever the case, I think that there's, and maybe rightfully so, there's a bit of an onus now on those regulators and reporters to say, okay, yeah, we're not going to just take whatever somebody in the crypto industry says for granted, right? Yeah. Maybe we are going to be a little bit harder, and you've got investigations that have been opened in the U.S. against Binance for alleged money laundering. And there are a lot of news reports now that are questioning the kind of shadiness that Binance operates under, right? I mean,
I wouldn't say shadiness necessarily. I mean, although regulators have said that, so you're
sure
strong around there. But but there's a kind of opaqueness to it. And I mean, YYC, you know this, you've seen this, is that when financial institutions are exposed to the spotlight, that's when stuff happens. Because remember, every financial institution is subject to confidence. And as soon as that confidence ebbs, you are truly exposed. And there's only one defense when you're exposed, and that's reserves. You've got the reserves, you've got the cash to back up everything you've been telling the market, all of your positions in the market. That's the situation Binance is in right now, is everyone's asking questions like, if you were fully exposed, would you have the reserves? Would you have the capital to support all of your positions, to support all of your counterparty positions, to support your reserves, etc.? And that's what people, as you're reporting, Alex, this is what people are questioning now. And this whole proof of reserve thing, and the auditor, Mazar suspending its service, does not boost confidence.
Right.
Yeah,
Go ahead.
Go ahead,
So,
YYC.
No, I mean, like the audit firm stopped business with all crypto concerns. So it's not just Binance.
That's right.
I think it's because they basically found it too complicated and they said, we're not going to sign our names to this. Right? Like it is,
Yeah.
they're still learning as they go
Yeah.
along. Right? Like
Yeah.
anyone who's had to deal with crypto taxes knows that it's the worst pain you can think of.
Okay.
Yeah, and well, and they had also said that the proof of reserves reports that they had been putting out were being misunderstood by the broader public. You know, what exactly those reports meant was causing some kind of confusion among people who read them. And actually, it's not only Mazars that had stopped work for Binance and other crypto firms, but the accounting firm Armanino, which had looked at the books at FTX's U.S. arm, right? They had signed off on financial statements from FTX US in 2020 and 2021. Financial Times reported that Armanino is going to be winding down its crypto accounting business, and they had put forward that same reason that they think people just it's doing more harm than good, that it's creating more confusion than it is actually just any company. It's one of the 20 largest accounting firms in the US.
Right.
Well, but yeah, and Binance is a privately held company. It's not subject to the same. I mean,
right.
I don't want to sound like a Coinbase chill, but correct me if I'm wrong. It's a public company, and it's subject to certain financial reporting requirements that Binance isn't. And in fact, go ahead.
Well, you raise a really interesting point, which is that exchanges such as Binance, even if it's not a publicly listed company and domiciled in the United States or London or someplace, they're public pieces of infrastructure. They're an important piece of market infrastructure. So it isn't just a private company out there selling NFTs or selling a very discrete product. It's actually part of what makes crypto. It's like a utility almost. And so if that utility begins to lose a lot of confidence, it's like if the New York Stock Exchange were to start losing a lot of confidence before it had become a public company, which it did years and years and years ago. But it's like, oh, wow, the utility, it's like the power is about to go off or something. You know, it's just, that's why it's so important and so critical. And I think in the year to come, as YYC said, this auditing complexity, this challenge that crypto has in auditing is going to be a massive story, because to bolster confidence, to regain trust in the market, I think crypto as an industry is going to have to demonstrate that reserves and audited reports and disclosures of those reserves are all totally above board. But if firms are not willing to perform that function, you got a problem, right?
Yeah, and to your point about the kind of critical role they play in crypto, the Wall Street Journal had a report that noted that they do about $76 billion worth of transactions in Bitcoin and Ether a day, and likened them to the quote crypto equivalent of the London, New York, and Hong Kong stock exchanges combined.
Yeah.
Which is
true.
Right. They're that big, and they're that important to crypto.
Right. So you've got this behemoth that it's like they're the ball game. And the more questions are asked and remain unanswered in the marketplace, the more that's going to be, I mean, at a minimum, it'll just be like an overhang on the market. So, I mean, it'll be interesting to see. I mean, YYC, you probably have some insight on this, but imagine if all the macro stuff that we've been dealing with this whole year, inflation, interest rates, correlation between crypto and stocks, especially tech stocks, imagine that all got kind of ironed out by the second quarter, and that macro overhang was gone. And all of a sudden it was like the clouds parted and crypto was hit by a fresh ray of sunlight. But Binance was still this kind of question mark. I know it's hard to predict all this stuff, but YYC, what do you think how do you think investors would react to that?
I mean, it's right now. It's like the FUD is everywhere, right? It's exchanges are collapsing left and right. People have like this year you had pretty much every centralized platform, barring a few failed, right? So people were lending platforms, yield platforms, and people, other unrelated platforms that had put money into like stuff like Anchor and UST, right, back in May. Promising like safe savings and stuff. So I think like confidence is already kind of shattered and like gone pretty much in the industry. So from here, I think the only way is up. To be honest, like I like if Binance, God forbid, has liquidity issues or something, I think that would be like the final straw, and like people just be like, all right, we're done with crypto. But then
I think that seems reasonable.
And that's why we have DeFi. And interestingly enough, we had a lot of adoption-related announcement this week that would basically enable people to get directly into DeFi without relying on centralized exchanges or custodians, to on-ramp into DeFi. So you could go straight from fiat to self-custody, which I think should be the goal. Obviously, we're the Defiant, so that's goes without saying. But like people still don't understand the difference between crypto and like self-custody and those things. Like everything is conflated with Bitcoin volatility. That's the headline stuff, right? People still haven't kind of grasped what all the people who are still here are trying to build, and which is a way to kind of secure your assets yourself, not have to depend or be at risk of any of these collapses or contagion.
I think that's a massive theme, and let's delve into that a little bit more. But before we do, let's give a shout out to our sponsor, Railgun.
DeFi with private, anonymous DEX trading is real and works today. The Railway wallet uses the Railgun encryption system to keep your trading strategies hidden from greedy eyes. Try the Railway wallet today. Visit the website at railway.xyz. Be private. Railway is available for mobile and web on Ethereum, BSC, and Polygon.
All right, so just picking up on that DeFi adoption theme that you brought up, YYC, we had a story this week about stablecoin volume hitting a record high of $7.4 trillion in 2022. And all of this is happening, of course, during the worst stablecoin meltdown ever with UST and Terra, of course. But we also had another story on Visa unveiling a plan for auto payments from self-custodied wallets. So two stories supporting your point. YYC, can you just unpack the stablecoin volume data point for us and help us understand the significance of that?
Sure. So stablecoin volume, like you said, hit 7.4 trillion in 2022, meaning this is stablecoins being used for payments, transactions, everything. Like I think that it includes everything. And the report says that, what does it say? It beat out every major payment provider apart from Visa, which did like 12 trillion.
That blew me away. That's mind blowing.
And that leads into the report from Coinbase they put out a couple of days ago as well that we've done a story on.
Yes.
Where they say that stablecoins are essentially have become like the way to kind of preserve and transfer wealth in crypto. So they've built that niche for themselves. So regardless of the bear market, there's been an uptick in stablecoin usage, and which is encouraging because what that shows is that people don't mind remaining crypto native, which means they don't want to cash out to fiat and go back to the traditional banking system, and they're comfortable holding stable coins.
Very good point. It is fascinating to see that happening at the end of this year, and it dovetails with Coinbase kind of coming out and ringing the bell for real world assets, which is a story that the Defiant has covered in a lot of detail going on more than 6-7 months now, ever since Aave and MakerDAO embraced real world assets, which is assets like bonds and real estate and so forth, just putting them on chain. That's been a very important story that we've covered and I dare say that's going to be a massive one going forward because it's good business. There's a lot of revenue to be made if you can bridge the world between traditional finance and decentralized finance. And a lot of institutions are very interested in this. As Sam pointed out in his story, Societe Generale, which is the number 3 bank in France, is very bullish on the use of real world assets on chain. There's a number of banks in the US and Australia, which are also delving into this area quite a bit. And if YYC, as you said, if stablecoins are proving their utility in such a tough year, I would think that has to continue to bolster activity from institutional investors looking at DeFi as a way to offer new products, services, et cetera, to their customers.
Absolutely. And I've mentioned this on previous calls, that I haven't sent a wire transfer in a year and a half because it's so much simpler to just send USDC. If you're conscious about the fees, do it on Polygon. Cost you cents, and the person you're sending it to gets it in 10 seconds. You're not waiting a week. Yeah. And that's, I think, payments are the main use case that crypto was built to solve, right? Decentralized payments. Everything else kind of built on top of that, where it's okay, you're trying to build wealth, portfolio management and liquidity and all the fun stuff. But at its core, the infrastructure is meant to replace Swift and the ancient cogs that run the financial machine, right? So whenever people ask me why do you think crypto is here to stay, I'm like, just look at this. You can send money to anyone in the world as much as you want. No one will ask you any questions. You don't have to, get permission from anyone or approval from a bank. No correspondent banks in the middle to kind of take their cut, and it's done.
Yeah, I think that there will continue to be a lot of friction. I actually don't think it'll become an either or, kind of a zero-sum thing. I mean, Swift is not going away. I mean, the commercial banking system and cross-border payment system won't go away. But what'll be interesting to see is how DeFi may coexist in that traditional system, which is probably what's going to end up kind of unrolling. But we continue to see these projects rolling forward despite everything. And, we saw this week, we had a story this week, Uniswap allied with MoonPay to bolster debit card transfers. Alex, tell us a bit about this story.
Sorry, I had to unmute myself. So that's really interesting because, if, as far as I'm aware, you guys can correct me if I'm mistaken about this, but if I want to get into crypto at all or DeFi, I have to go through a centralized exchange like Binance or Coinbase or Kraken or what have you. And so what's really interesting about this is that it's essentially an on-ramp direct to DeFi. I'm not familiar with that having been a thing before, and maybe it has, but I mean, this is a huge integration, right? Because Uniswap is the decentralized exchange. I mean, maybe not to quite the same extent, but what Binance is to centralized exchanges, Uniswap kind of is to decentralized exchanges. I mean, it has last I checked, 2/3 of the DEX market. I know that Curve is also really big, but that's just for swapping stablecoins. So, I mean, this is it's, like I said, just straight to DeFi, straight to permissionless transfer of wealth and all that good stuff.
So you think this has the potential to be a groundbreaking deal?
Kind of. I mean, caveat.
At least they're giving it a go, huh?
Yeah. There is a caveat, which is that MoonPay is, I think, part of what makes this possible is that if you want to do this, you have to KYC. MoonPay will ask you to provide the information that you would normally have to give over to a bank if you're creating an account. So the true like DeFi dream of like entirely permissionless finance, where you're just, you're spending and exchanging money and nobody has any idea who you are and whatever.
Right.
This isn't that exactly, but it's a big step toward that. So you still have to KYC. There are minimum and maximum requirements for like, how much crypto you can purchase through this integration. I think the max, if I remember correctly, is like 10,000 USD, right? So there are limits there, but yeah, I mean, I think it's a big deal. It's going to be really interesting to see how much adoption this gets, right?
Indeed.
Whether everybody who's already into crypto is like, ooh, finally, like I can, this is the thing that I've been waiting for, or if people are like, no, I'm good, I'm still just gonna, use Binance, Kraken, whatever.
Right.
Yeah. So MoonPay was basically, or rather came into the limelight because they facilitated the purchase of like Bored Apes for celebrities last year, right? So when a lot of the famous folks picked up an ape, it was all done through MoonPay. And I think now that NFT volumes have kind of died, they're looking for another source of revenue, right? And what better way than to partner up with Uniswap?
Yeah. No, that makes sense.
And and just to clarify your point, Alex, there have been other solutions similar to this that let you on-ramp directly into DeFi, like the Dharma wallet is one. Even Robinhood, right? You can, well, it is a centralized exchange of its own, but it's not a crypto exchange, right? But it lets you withdraw ETH, etc.
Right. Yeah. Okay. Moving on, there were a couple of really interesting stories squarely in DeFi this week, excuse me. We had Aztec, which is described as a VPN for Ethereum. Is that right, Alex?
Yeah, they're in some of their own material, they've used that phrase to describe their product.
Right. So what I liked about this is that you took a story, a classic fundraise story that raised 100 million in their latest round, led by who else? A16Z. But you took a classic fundraise story and used it as a springboard to look at the building debate, let's just say conflict, that's emerging between investors who want to maximize the financial privacy that's afforded by blockchain technology and the enormous pressure that's coming out of the regulatory world to bring all of that privacy to heel and require, as the Elizabeth Warren's bill would do, to require anything in crypto to do know your customer and anti-money laundering checks as any financial institution would have to do. And so just tell us about how A16Z, these venture capitalists, are making this huge bet on financial privacy at a time when all that pressure is ramping up.
Yeah. So, I spoke to the two founders of Aztec. They had actually initially set out to create a different product. I can't remember exactly what it was, but the gist of their pivot was that like certain financial products don't work if you don't have privacy, right? Like they just, people don't want to use them. So they switched to working on this and have pioneered some, zero knowledge technology. For anybody who doesn't know, zero knowledge proofs, zero knowledge technology allows you to prove that something is true without revealing any of the like underlying information that makes it true, right? It's like like showing to you that like
in software design,
it's like telling you like I can prove to you that I know that FTX was a fraud, but I don't have to show you the books. It's like magical technology, right? It's really interesting stuff, and that's what Aztec is working on. So
I see.
But what I wanted to know when I spoke to them was, how hard it was to lead this massive round, like right as privacy in the blockchain world was becoming such an issue, right? I mean, you mentioned the Elizabeth Warren bill that would like ban privacy within crypto, basically, and over the summer, Tornado Cash was sanctioned by the U.S. Treasury Department, and Dutch police arrested one of the programmers who contributed to Tornado Cash. So, as all that's going on, how do you convince an investor to put up, $1 million, $10 million, $50 million, knowing full well that maybe your software might be illegal next year?
That's really well put. Yeah, I think that's fascinating.
And their answer was basically, well, it actually wasn't that hard. They tell me that some of the less seasoned, I think was their term, less seasoned investors got a little nervous when the Tornado Cash stuff came out. But the ones who've been in this space for a while, they never balked. They're behind the technology and the concept, and they stuck around. I asked them, so who passed on you? Like which investor didn't want to invest in you because of this? And one of them, I forget which one, said FTX.
Oh man!
Really
wow,
funny.
Talk about dodging a bullet.
Yeah. But the specific example, and anybody who's read the story can see that I lead with this, is that A16Z, who led this round, the founder Mark Andreessen had fought this fight before, and so for people who don't know, because this is like ancient history now, there was something called the encryption wars back in the 1990s, and that was when even the most basic encryption was considered really dangerous technology by U.S. law enforcement, and Andreessen had co-founded a web browser that was encrypted in some way. My knowledge of Netscape is kind of rudimentary, so apologies if I get any of these details wrong, but it was encrypted, and Netscape wanted to sell its browser to the world, and U.S. authorities had put that encrypted browser, the particular kind of encryption that was available to American customers, under the same export control category as Tomahawk missiles, because they were so worried about foreign nationals being able to browse the web privately. They thought it would really hinder their efforts to, police crime around the world or what have you. And Andreessen and Netscape eventually won. Now, there's no question about exporting encryption technology around the world. And so they were really, they had told me that the first VC that they had set out to get when they wanted to raise their new round was A16Z, and that they were very happy to get them for this very reason, that they know that this is going to be a valuable partner in the upcoming battle with regulators around the world. Now, their take is that this shouldn't be a battle, that this should actually be a win-win for everybody, because zero knowledge technology, for the reason that I had put out earlier, essentially allows one to have their cake and eat it too. And this is something that we've mentioned in past articles, that you can, the term that they used in this interview is, I believe, preemptive compliance, right? So being able to KYC and kind of provide this information that regulators want without simultaneously actually giving them your name, your address, your bank account number, whatever. And that opens up another can of worms, right? Like, there are people in the crypto and DeFi space who actually don't like that idea, right? Because they think it's going to make regulators' jobs easier. But it will, right? So the Aztec founders were saying, like, this regulators might actually not like it, because it will make their jobs so easy that it'll put some of them out of business. Like, you won't need armies of people combing through, documents to find ne'er do wells.
So this is kind of where kind of next generation blockchain based technologies meets RegTech, because that's the central thesis of RegTech, is that it's technology that regulators will love because it'll make their jobs easier and it'll drive down costs, compliance costs for all manner of businesses that have digital revenue streams. And so I can see, but I think your focus on Andreessen's really interesting. I mean, the upshot of this is that Andreessen's like been there, done that. 25 years ago, we saw a massive freak out about Netscape, and look what happened. So and that's how he sees cryptocurrency. That's how his firm sees cryptocurrency, is that this is all just an iteration. And that is the hard thesis at the heart of A16Z's approach. So I can see how, for all of the noise happening around Tornado Cash and privacy, they would keep their eye on, what does the company make? Does it work? How adoptive is it? And how big is the market?
Right. And so they're hoping to use this massive fundraise now to build out the tech and kind of finish out their roadmap for decentralizing it. And, it'll be
that's
really
what VCs are supposed to do.
Exactly. It'll be interesting to see how that goes, and also just, what happens on the regulatory front. There's a lot of stuff happening here and in Europe.
Yeah.
So,
well, that's great reporting on that story. And again, this is one that next year I think is just going to be even more newsworthy as that tension kind of fires up. So let's switch to YYC's favorite topic, NFTs. There's always action in that space, no matter what a bummer NFTs might be here in, here out. There's always like really scintillating stuff going on. So tell us about what happened with ApeCoin DAO, YYC.
Sure. So basically, ApeCoin DAO is the DAO that administers the Ape token, right? And the community ecosystem that Yuga Labs is building around the Bored Ape NFTs. And a year ago, a company called Carton Group was appointed to be the administrator of the DAO. And I believe they were being paid $150,000 a month in fees, for all the stuff they were doing. But the contract was set to run for a year and is set to expire at the end of this year, so in a week. And when it came time for renewal, a proposal was floated to expand the scope of operations of Carton Group and, of course, increase their fees as well from $150K a month to $250, and with the addition of 20,000 Ape tokens worth around $70,000 as of 3 days ago. So this proposal was shot down by the community, pretty overwhelmingly. People were against it because I think, first of all, it's a bear market. I think people are more conscious now about costs when it comes to just spending money on proposals, because we've seen a lot of waste from DAO treasuries over the past 2 years. Right, there've been like many examples of lavish spending on events and things like that. Especially, I think Sushi had a problem with this way back before the new head chef came in and stuff. There was no accountability per se with how the treasury was being spent. And because the teams of these protocols usually control the majority of the tokens, it's like the vote is generally moot, right? It's decided before the proposal is put up, if it's an official proposal. But anyway, so we'll have to wait and see how they handle this and what the Ape DAO is going to do next.
Okay.
There was a proposal to do a temporary extension of 3 months and then take it from there. But I'm not sure how advanced that proposal is so far.
Okay. All right. Another really interesting story on the NFT front this week, our colleague Owen Furnow reported on wash trading accounting for over half of NFT volume in 2022. YYC, explain to us what wash trading is and why is it so prevalent in the NFT market?
All right. So in traditional finance, wash trading is when you trade assets between accounts that you control to kind of give the false sense of activity and volume in a particular stock or thing in a bit to kind of boost interest in it, right? And so we've seen that happen a lot in crypto tokens, right? For the same reason, where people with a bunch of the token would trade it back and forth, make it look like there's more activity than there is. And then obviously, people would FOMO in and they'd be able to exit at a better price or what have you. In NFTs, it's not exactly the same, just because there are token incentives that drove this behavior, especially at the start of 2022 when LooksRare and X2Y2 launched. These are competing NFT marketplaces that basically heavily incentivize trading on their platforms to try and get some market share away from OpenSea, right? So basically what people were doing was trading royalty-free collections, like Meebits. Meebits was a very popular collection to be traded on LooksRare.
Yeah.
And people were flinging these across for like 300 ETH, 500 ETH and stuff like that,
Crazy.
just because there was no royalties being paid. And the token incentives were so generous because their particular model basically made it so all the trading fees that were collected on LooksRare were paid to people who staked the Looks token, right? So, and you would get paid in ETH because that's, it's taken out of the purchase and sale price. So yeah, so you can see on this chart that we saw this huge spike at the start of the year, essentially.
Right.
And that's died off so far, somewhat, I'd say now, because, all right, let's see. Yeah, so you can see here that there's a huge spike. The black bars. This is all Looks farming, because it was one of the best farms ever while it lasted. Because what you could do was essentially keep farming, keep trading your NFTs back and forth, stake your Looks, and you could also short and hedge your Looks position on FTX, and still come out ahead after everything. So while it lasted, it gave the NFT market a boost, and people farm a decent amount of money. But as you can see here, of course, volumes overall have just died off completely, right? And so this little uptick that you can see in December, this is now Blur doing the same thing.
Oh, okay.
Right, but on a much smaller scale because like the space has shrunk, right?
Yeah.
So, but it's still quite a boost from like what it was a couple of weeks ago. So right now, Blur is incentivizing bidding. So which means the closer you bid to the floor price, the more points you get. And so this has resulted in many people actually ending up owning the NFTs because you're bidding so close to the floor. People just come and say, all right, take it. They take they fill your bids. So which is kind of leading to this uptick in volume, right?
Okay.
So that runs until the end of this month, I think, or maybe into January and then the token will launch. So we'll have to see how that happens. And just to go over the methodology that the analyst used to determine this statistic. First, he took out all the purchases where the buyer and seller were the same wallet. I mean, that's pretty obvious wash trading, right? And second, NFTs that went back and forth between the same two wallets multiple times. Again, clear red flag. And then he filtered out wallets that bought the same NFT 3 times or more, because that clearly you wouldn't do that as a regular. You wouldn't need to buy 3 times. And finally, he filtered out trades where both wallets were funded by the same wallet. So I might have like created 2 new wallets, sent ETH to both of them, and then started bidding back and forth between them.
Oh my God! Wow. Okay.
I mean, people found all kinds of ways to game.
That's really good research there, isn't it? I mean, that's some serious data diving and a really nice report to capture this phenomenon that's been happening in the market.
Oh yeah, absolutely. So Hildobby has been putting out these community Dune dashboards for a long time now. I've been following for a while, and I mean that's. I think we discussed this on our print call the other day. I mean that's how you get noticed in Web3, right? And he put in the work, shared the data.
Yep.
The community found it useful, and then he's landed a job with the Dragonfly, the VC firm.
Yeah.
Yeah.
No, that's super. That's great work. Cool. All right. Well, thank you for walking us through that. Before we say goodbye and wish everyone a happy holiday and a happy new year, just want to let everyone know that next week we will be rolling out our second annual collection of stories touring the year that was, but also looking forward to the year to come. And so we'll be looking at all of the biggest stories that occurred in DeFi, everything from the battle between DeFi and CeFi. We're going to have a story. Our colleague Owen Furnow is writing a story on the DeFi breakthrough of the year. Alex is going to be writing a profile of the Defiant's founder of the year. And, drumroll, leading up to next Friday, we'll be publishing the 2022 Defier of the year. And Alex will be writing a profile on that person for next week. And in between, we're going to be writing pieces, publishing pieces on all of the major trends, from what happened on the regulatory front to exploits to YYC weighing in on the most interesting collections of the year. YYC will also be capturing the bear market and providing wisdom to us on how to put the bear market into perspective. I'm sure that will be forthcoming. And just a lot of other bits and pieces. So please tune into the website next week. Keep your eye out for the Defiant newsletter, because all of our stories will be coming out daily, all the way leading up to New Year's. And we'll be back in 2023 with another weekly recap. And again, just want to give a shout out to our sponsor, Railgun. And catch you on the other side. Thanks, Alex. Thanks, YYC.
Thanks for joining, everyone. Happy holidays.
Happy holidays.